XRP returns to one-year demand zone as rebound conditions begin to form. XRP has now pulled back roughly 48% from the 3.66 peak set in July 2025, and price is rotating back into a one-year central demand zone between 2.21 and 1.85. This zone matters because it's not just support on the chart, it sits right at the center of the one-year structure, and it has already acted as a launching pad for two major rallies, including the most recent surge in June 2025, which eventually reached 3.66. So this isn't a random level. This area carries real structural weight and market memory. Now, in December 2025 into January 2026, XRP tested this demand zone, but the first response failed to hold. And as of January 24th, price is trading back down near the lower edge, around 1.85. Volume across this rotation has been thin, and that's common when the market is sitting at a major decision point. Liquidity dries up, movement becomes tighter, and then the next direction starts to reveal itself, once acceptance or rejection is confirmed. But here's what stands out right now. First, there's a divergence forming between RSI and price. Price has been pressing lower into the demand zone, while momentum is showing signs of stabilizing and attempting to lift. That divergence doesn't guarantee a reversal, but structurally, it often signals that selling pressure is weakening, even while price still looks heavy. Second, the trend-based Fibonacci time is also lining up for what could be the next price cycle. And when timing tools compress into a major structural zone like this, it usually tells us the market is approaching an area where rotation risk rises, and a stronger expansion move becomes more likely. This is also not happening in isolation. Bitcoin is trading around a critical central pivot as well. And when major assets compress into key zones at the same time, it usually reflects a broader market reset phase. So the focus now is simple. We are watching how XRP behaves at this central demand zone. Now, let's map out the key reference levels. If this demand zone between 2.21 and 1.85 holds, and price begins reclaiming levels above it, the next upside reference points come in around 2.55 as the first reclaim pivot, then 2.90 as a rotation confirmation zone, followed by 3.25, which is a key gateway into the upper structure, and then 3.60 to 3.66, which marks the prior peak zone. The key point here is that price doesn't need to go straight up. A strong rebound cycle often starts as acceptance, back above the midpoints first, and then continuation follows. But if the demand zone fails, and price breaks cleanly below 1.85, the structure suggests a rotation into the lower bands, with downside levels in focus around 1.50, 1.45. Then deeper references around 0.79 and 0.57. That would represent a shift into the lower structure, where markets typically search for deeper liquidity and value. So, here's the confirmation checklist from a desk point of view. Bullish confirmation comes from price holding the 1.85 to 2.21 demand zone, and then reclaiming 2.55 and 2.90 with stronger participation. Bearish continuation risk comes from repeated rejection inside the zone, followed by a clean break below 1.85, which opens the path toward 1.50 and potentially lower. Structure provides context. Price provides confirmation. This is a high-impact area on the XRP chart because it's the center of the one-year structure, and it's also the same zone that launched prior expansion cycles. Whether it becomes the next launch point or breaks into a deeper reset will be decided by acceptance or failure at 1.85 to 2.21. Stay connected to the MacroStructure trading desk. You're welcome to subscribe and follow updates as prices trade around these crucial levels. These desk updates document a structure-first process, observing how price accepts or rejects predefined levels over time. This observation is for informational purposes only and does not constitute financial advice.